So today's headline news is basically Fed, 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 Fed. And that's what we're going to talk about because all mainstream media has today is the Federal Reserve is going to raise rates 2 more times this year. So Chairman Powell is going to testify in front of Congress today and tomorrow as part of he does that once a year, and they basically just drill him to death. What we normally see in these testimonies are the markets usually really, well, the Congress, they grill Chairman Powell. And a lot of this stuff comes off script. So they really can dissect what is going on. Many, many, many times after his congressional meetings, the markets dig into the details and like actually what he's saying. So we're going to get to that. But the first thing I want to give you is some data that just came out this morning in regards to the California housing market. Now, California was supposed to be the first domino to fall in this housing crash throughout the whole country that everybody's been predicting. So we see right here, California home sales down 23.6% year over year in May. Median prices declined 6.4%. My analysis or my prediction for this year was housing markets could be down about 5.5%, maybe 6% overall. But I didn't really see that in many parts of the country. So I'm predicting basically a 0 to -5% in some of the hot areas of the country. Other areas might even see some price growth, but you're going to disagree with me on that. But let's dig into this context. Let's dig into these details so you understand what's going on. So let's get over to, we go down through here, and what we want to focus in on is right here, okay? So I'm not hiding anything from you guys. Let's go up through here. I read the captions. May statewide median home prices came in at $836,110, up 3%, up 3%, and up 3% from April, the month before. Housing market up 3% in 1 month. It's nuts. Okay. California housing market rebounds in May as home sales surged to the highest level in 8 months. And then you go down through here. California's median price exceeded $800,000 in May for the second straight month, increased 3% from April's 800 and whatever. The statewide median price continues to rise and reach the highest levels in 9 months. So for a lot of you out there that are saying, the housing crash is here, or you're waiting for that crash to occur, guys, I don't see it. If we're not seeing it in California, how are we going to see it in Ohio, Maryland, many other states in the whole country that didn't see the robust appreciation that California saw? Okay, so that's my context. California was supposed to be the leader in all this, and so far it looks like they bottomed out, and now they're up 3% in 1 month. The price, I'm not talking about sales. We said sales are going to be way down this year because existing homes people like myself who have a 2.5% 30-year fixed rate, we're not going anywhere. Okay, we're not putting our houses on the market unless we have to. And based on the have to, use the foreclosure numbers, not a lot of people are having to right now. So let's get over to what the markets are telling us, though, in regards to what the Federal Reserve is going to do. Powell's expected for more rate hikes coming. Then you see on Yahoo Finance, Powell, nearly all Fed members expect to raise rates again this year. So okay, that's what they're saying, but what's actually, where's the money putting us? So we to do that, we look at the Chicago Mercantile Exchange. It's basically the futures market. It's where people are betting. I'll put it that way. People are betting on what's going to happen. So we have the Chicago Mercantile Exchange FedWatch tool. Yes, there's a tool out there that watches this, and it's actually some futures markets. So this is telling us what is the likelihood that the Federal Reserve will change the federal target rate at the upcoming FOMC meeting, according to the interest rate traders. Okay, what they're telling us right now, currently we are at 5 to 5.25. We're in this range right through here. You can't see it, but I'll put an arrow in there. So we're 5 and 5.25. So there's where we are. Now, 5.25 to 5.5. Now there's an 80% expectations that in the June meeting, you're seeing right here, that the Fed's going to raise rates again 0.25%. So they're telling us, and the money's taking us in that direction as well. Let me give you my take on this market. So the Federal Reserve has done, let's break it down. Out of the last 11 meetings, they increased rates 10 times out of those meetings. Inflation went from over 9% to now we're just teetering in the high 3s, low 4s. I know it's not the 2% that they're hoping for, But it's a huge move, folks. It's not going to happen like that because we poured in trillions of dollars in stimulus money, and that's what caused the inflation. So those numbers are starting to come back down. The jobs market is starting to stabilize, and the numbers out there and the jobs abilities and so forth, those are all stabilizing. CPI last number, the consumer inflation numbers, and the PPI number, the producer inflation numbers, are negative right now. Those are all pointing us in great directions. So what's this telling us? Well, basically, here's my analogy of this. I think the Federal Reserve is going to talk and talk and talk and hope their verbiage takes care of itself. Because even last week, when the Federal Reserve came out and said we're halting, we're going to pause, there was former Fed members that day on CNBC saying, no, they're going to raise today and they're going to keep raising. So is it something that they're just trying to tell us, talk their way out of this? I think so. Okay, but only time's going to tell. So let's get over to see how the markets are acting right now on Federal Chairman Powell's testimony in front of Congress, and it should be happening. It should be taking place right now. You're seeing that pop up on the screen. It came up live. That just popped up. So what you're seeing, he's coming in right now. You're going to see these numbers starting to move, but they're not going to move right now because he just started. But basically, the market's telling us this: mortgage rates, they're going to go up a little bit. So how do I know that? Right on my screen. So I'm a mortgage advisor. This is what I monitor on a daily basis. I watch what the MBS market's doing because this is a mortgage-backed security bond that trades on Wall Street. That's yield is the biggest component of your mortgage rate. So that's why we follow this. We don't follow the 10-year treasury or anything else. We follow this. What this is telling us is what you're seeing on your screen is the price of that bond right now is 98.34. It is down 0.19. All you need to know is this. If the number is down for the price, that means the bond yield is going up. Basically, it means your mortgage rate's going up. The bigger the number down, the bigger the rate going up. But it also it goes in the other direction. Like yesterday, yesterday was kind of a bad day. We opened the market. Well, let's go here, 2 days. If you look at this chart, you're going to see where we opened up right over here, and then we went way up. So rates came down, 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 and then it turned, it pivoted, it buckled, and then came back down. People were anticipating today's Fed meeting. So right now we're down 19. It means mortgage rates are up just a little bit. Where are they yesterday? Well, Mortgage News Daily posted this, and they haven't posted today's rates yet. This is where we ended yesterday. These are the top 6 products people use when they're buying or refinancing a house. These are not my rates, folks. These are published by Mortgage News Daily. They surveyed mortgage companies all over the country with this question. If you had a borrower looking to buy their first house, it's going to be their primary home, and it's going to be a single family home. Okay, that has to be for sure. They have a 740 credit score and putting down 20%. 20%. You don't have to put down 20%. You only need, in most cases, 3. These are what the rates would be. So these are published by Mortgage News Daily on a daily basis. If you want to check these out, I have a link down below for you to get these. But you might be sitting there saying, Dan, how do I qualify for a mortgage? How much can I qualify for? How much of a house can I get? How do I find a realtor? How do we get answers to all these questions? Well, easy. First thing is I got 3 ways for you to reach out to us so we can help you guys navigate this journey. I've been doing this for over 30 years. My whole staff is basically sitting around us. So we work together. We probably have hundreds of years of experience in this. How do you reach out and tap our brains? Well, the easiest way to do that is give us a call. 844-775-5626. Or if you're like, Dan, I just want to put in an application, I need you guys' help. Well, just do that. The application button's right there. Or you might be thinking, I really would like to talk to somebody first, but I'm not available during office hours. What do I do? Well, I have a link down below that you can schedule a one-on-one consultation with me or one of my mortgage advisors to do just that. Answer any and all questions that you have when it comes to buying your first house. So that's our video for today. Don't forget, guys, if you're out there and you have student loan debt, and it exceeds, let's say, $20,000, you need to check out our live event this evening. I have Catalina. She's the owner, CEO, and president of My Loan Sense, and is a student loan assistance program to help you guys navigate all the relief programs, all the different kind of payment plans that you qualify for. You're going to be able to answer all those questions today. So I don't care if you're buying a house or not. If you have student loan debt, please join us tonight to get all those questions answered in regards to forgiveness, when the payments are starting, and what you can do to get as much relief as you can possibly get. So that's it for today, guys. Thank you so much for watching. Don't forget to give us a thumbs up and subscribe down below. That helps us reach out to more and more people to help them out. So thanks so much. And I hope to see you tonight on our live event with Catalina from My Loan Sense. See you, folks. Talk to you tomorrow. Bye-bye.